make sure you hit the subscribe button. In this video, I want to fully help you understand the SEC case against Ripple and its settlement. It's crucial for us to break down the nuances of how the SEC determined that XRP constituted an unregistered securities offering and how XRP relates to Ripple. I've been studying XRP for quite some time. I've been invested, I've been holding, I've been going through the trials and tribulations, but I'm pretty much here for the long haul. Now, if you want to invest in the XRP immediately, click the link in my description and create a trading account. Tap into my Telegram group, the Wealth Compass Chronicles, where I drop exclusive updates on companies I hold a stake in. Stay ahead of the curve with real insight, straight from the source. Master Quency. Now let's get into it. All right, so just to kick things off, how did the SEC determine that XRP was an unregistered security? The SEC whole argument was solely based on the Howey test. For those who are unaware, the Howey test is a legal standard that derived from the 1946 Supreme Court case SEC versus W.J. Howey Company. Now, if we look deeper into this test, it determines whether an asset qualifies as a security by examining the following. A, there is an investment of money. B, there's a common enterprise. C, there's an expectation of profit. And D, that profit is derived from the efforts of others. See, what we got to put into perspective about is the SEC's argument. The SEC argument that Ripple's sale of XRP met all four criterias. I'm going to break this down point by point. The investment of money, which is solely surrounded on buyers whom purchased XRP with the expectation that its value would increase over time. Ripple, which is the common enterprise or the AKA central entity, Ripple controlled a large portion of XRP and played a role in promoting its adoption. This is one of the main reasons why SEC was so adamant is that common enterprise. If Ripple didn't have their hands on XRP, then we wouldn't even be here. The expectation of profit, basically many investors viewed XRP as an asset that would increase in value, largely due to Ripple's business strategies. And Ripple has some very good strategies. Can't knock them for that. The efforts of others. The SEC argued that Ripple's marketing and development efforts were key to XRP's value appreciation, making it dependent on Ripple's actions. So XRP pretty much is depending on Ripple in order to increase its value. XRP was sold without registering as a security, and the SEC classified it as an unregistered securities offering, and this is what pretty much led to the lawsuit. So why didn't XRP register as a security? That's the question most people want to know. Why didn't XRP register? If that's all they had to do was register and all of this wouldn't even happen in the first place, that's something we got to look at. But if you stay tuned through the whole video, I would give you more insight as to why. why XRP didn't register. Now, how XRP relates to Ripple. SEC was hawking. See, the real insight why the SEC linked XRP to Ripple is it's important to look at XRP origins and how it was designed to function in the first place. See, XRP was created in 2012 by 3 engineers, David Schwartz, Jed McCaleb, and Arthur Brito. They envisioned a faster, more scalable alternative to Bitcoin. They formed OpenCoin, which later became Ripple Labs. Now, unlike Bitcoin, XRP was designed as a bridge currency for financial institutions. Now, this was their point intended. Ripple's vision was to use XRP to enable fast, low-cost international payments. And it replaced SWIFT, which SWIFT is just a traditional banking system for cross-border payments. Drop in the comments if you know about SWIFT or you heard about SWIFT. But yeah, drop that in the comments. Now, Ripple's control over XRP, although Ripple did not own XRP in the same way a company owns its stock, but it controlled a significant portion of its supply, initially holding 80 billion XRP out of 100 billion total supply. Oh yeah, Ripple had a hold of 80 billion of XRP's 100 billion. So you know they put a lot of work in to get them to where they at. Now, the SEC saw this as an indicator that Ripple had a level of centralized control over XRP's price and distribution, unlike true decentralized cryptocurrencies like Bitcoin or Ethereum. Now, why this case matters for crypto regulation. The Ripple versus SEC case is about more than just XRP. It's pretty much a test. It's pretty much a test case for how crypto assets will be regulated in the US. The core question is, are cryptocurrencies securities or commodities? If XRP is a security, then most cryptocurrencies is issued through ICOs, which ICOs are initial coin offerings. It could be classified as securities requiring compliance with strict SEC regulations. Now, it's important to know how SEC is examining all of this. If XRP is not a security, then the SEC's authority over cryptocurrencies in a whole is weakened, and other projects may have more freedom to operate. Now, if they allow XRP to slide with this, then, you know, they would have allowed many other cryptos to slide as well. And they wasn't trying to have that happen, because you have one slide, then all these other ones going to be coming out of nowhere, and SEC ain't going to be making the money they want to make. Now, the recent settlement was a compromise where Ripple accepted some regulatory oversight, agreeing that institutional sales were securities, but maintained that XRP's use in public trading is not subject to SEC rules. Now, if you know anything about the ship of Theseus paradox, the battle over XRP's classification is like the ship of Theseus paradox in a philosophical perspective. So if I break this down, the ship of Theseus asks this question, and you can do your own research on it if you want. But if you was to replace every plank of a ship over time, is it still the same ship? Well, similarly, if a digital asset like XRP starts as a token controlled by a company, but it later becomes widely traded and decentralized, should it still be considered a security? That's a good question. That's a very good question. And this is a question that we all should be asking so we could be aware of this. Now, Ripple argued that XRP original sale may have had characteristics of a security, but over time, as more independent holders, exchanges, and developers got involved, XRP became decentralized, making it more like a commodity like Bitcoin rather than a security like stocks. This philosophical dilemma is at the heart of crypto regulation. So when does a crypto stop being controlled by its original issuer and become a free independent asset? That's another good question we got to think about. We got to ask these questions. We got to figure out the answers to them. But that's the real question in my opinion. So let me break this down. If you ask me, and I don't know about anybody else, I can't speak for nobody else, but if you ask me, uncertainty still exists, and it exists for a reason, and it will always exist. So the SEC can take advantage of the markets anytime they want because they some bloodsuckers. Real spill, that's what bloodsuckers do. And this is why it will always exist. The uncertainty, that is. Now, while Ripple's settlement provides some clarity, the SEC may still target other crypto projects under similar legal arguments. So the SEC gonna get some more people. The bloodsuckers, they out here, and they gonna get some more, folks. They gonna get some more. That's why decentralization matters. The more control a company has over a crypto asset, the more likely it is to face legal challenges. Because them bloodsuckers, they want to control. They want to control everything, especially when the market cap increases dramatically like XRP did. Oh, they looking at it like one company got control over another company. We don't want that. We want to control everything. So it's going to have to be some rules and regulations into this. That's how the SEC looking at it. Now, investor sentiment is key. The ruling may bring confidence back to XRP traders. And I'm going to do a video on that. But regulatory risks remain an ongoing factor for crypto markets, and it will be for a very long time because the SEC got to do what they got to do because they some bloodsuckers. Now, the best approach is A, stay informed, B, diversify risk, and C, understand the broader regulatory landscape. The SEC versus Ripple case is just one chapter in the evolving story of cryptocurrency regulation. Like, this ain't even about XRP personally. It's bigger than XRP. XRP just happened to be the example set caught in the crossfire for all cryptos with uncertainty, whether it's a security or decentralized. And XRP, unfortunately, got caught in the crossfire. Now, the way the SEC treated XRP is like a hustler getting locked up for a hustle. That wasn't illegal when the hustle kicked off in the first place. Look at it like a retroactive crackdown. For those who are completely confused, let me give you an analogy to follow up on that you can possibly relate to. And let me know in the comments if you can comprehend the way I break it down. Because as I evolve on YouTube and make more videos breaking down certain assets, I want to know that I'm doing a good job. Or if I suck. Now, Imagine a dude in the neighborhood. Let's call him JoJo Smith. JoJo Smith starts selling kicks out of his trunk. He got the plug overseas. He gets it for the cheap. He live on the outskirts. Then he slide to the city just to flip them. The kicks, that is. Now, for 8 years, nobody said nothing. He doing his thing. He popping kicks off. He getting his cake up. The law, businesses, even customers all know. They know what he doing. But it's all good. Ain't nobody saying nothing. Hey, ain't no snitches. Then one day, the feds roll up. They got the lights. Yo, JoJo Smith, them kicks you been selling in the trunk, you know it's illegal. You need a sneaker dealer's license. JoJo like, how though? Ain't nobody ever told me that. What you mean a dealer's license? A sneakers dealer's license. I've been selling kicks on the block for years. I've been selling kicks on this block, that block, even in other neighborhoods. Y'all ain't never said nothing. And the feds like, yeah, well, we just up and decided that your sneaker hustle should have been licensed from day one. So now you owe us a big fine for all the pairs you sold before today. The SEC on some Uncle Sam type of deal. I mean, that sound crooked, right? But that's exactly what happened to XRP in actuality. But looking at it from, different perspectives, SEC is more so in the right, but Ripple came up with good arguments. And that's the thing. It's like Ripple been selling XRP since 2012, and it was no issues. It was no problems. Everything was smooth sailing. And JoJo, we solid, no worries at all. That's how it was. But see, the SEC never warned them. They needed to register it as a security, and they did not warn them. And that's how the law is. They don't have to warn them. But then out of nowhere in 2020, they hit Ripple with a lawsuit saying, you should have known. But Bitcoin and Ethereum, they were allowed to slide. They let them slide, making Ripple look targeted. Now, there is no doubt that the SEC are some sneaky blood suckers. They truly is. And most people believe it would have been reasonable. It would have been a reasonable thing to do was to warn them. And even though I wish they did such a thing, because XRP would be way up, this is where I disagree, because if this case is related to the Howey case, which it is, then the fact that Ripple was a common enterprise over XRP, then this changes everything compared to why Bitcoin and Ethereum got a pass. Reason why the SEC let Bitcoin and Ethereum get a pass is because they like street legends with no boss, no entity, no company. Nobody owns them. Nobody controls them. They don't have a common enterprise like XRP. XRP is a whole different story in that department. Ripple still holds a significant stash and pushes its adoption, which means promote and monitor in short terms, making it look like a business investment rather than a free market asset. And that's the sole reason why SSC came knocking. Now, if the rules ain't clear, you got to look at it like this. If the rules ain't clear, it's always going to be a risk. And that's how the SEC like to keep it. They like to keep the rules a little unclear, a little misunderstood. so we could take you to court and take 50 million from you. SEC, goddamn, y'all some gangsters. Now, in the hood, people know if the system wants to get you, they'll find you, even if the rules weren't clear when you started. That's what Ripple endured. The SEC moved the goalposts. They moved the goalposts on them. See, after a game already started, after the game already done started, they didn't pull some new stuff. And that's why this case was such a big deal. Now, it wasn't just about XRP though. This is what a lot of people not understanding. It's not just about XRP. It's about how the crypto and the rules tied to crypto will move in the future. Now, tune into part 2 of this video. I will break down what kind of effect this has on crypto and what's next to expect for XRP. So you know I'm going to be excited about that. So don't forget to like, comment, and subscribe so you don't miss out. Peace. Thank you.